All right, happy Thursday, everybody. It is April 11th, 2024, and you're here at precisealgorithmtrading.com. I didn't drop our logo tonight, but let's start right here at our automated trading systems. This is the Dow futures, and we're still in this pattern, which is, yuck, it's down. Um, Today's the 11th, so we had one trade, nothing to write home about there. The Russell futures, these are the trades that it's automated, so it all trades by itself, and all the parameters are already fixed. So I think we got a little bounce there today. Yeah, the 11th, we had one up trade. This is the story of the day, even though that doesn't look like much. That is a $9,600 trade. So that's the kind of move I've been waiting for to negate some of this stuff, but we got a long way to go to get back. We got to claw our way up out of this. That probably isn't going to just totally go all up at once. It's going to take a while. And that's the nature of the beast and the game we signed up for. So, but that is a great start. Our manual trading, looking at the markets themselves today, the S&P 500. I'm going to look at the straight up indexes. So that is not a hammer candlestick. I don't believe. In fact, I almost am certain it's not. The definition of a hammer, I think it needs to be in the upper 25% of the total range, and that looks like it's too big of a range for that. And honestly, it doesn't matter because a lot of hammers get reversed anyways. So some people look at this like a hammer and want to jump on board, and this thing could go underwater tomorrow. In fact, the futures are under right now, and yeah, all none of that matters. The only thing I ever look for really in is a hammer if it's like a major bottom, and that's kind of one, but that's still not even clean enough. That's one right there. And you notice all the back and forth between it before it actually turns green and does all those things. There's really clean ones, and that's a nice big bullish candle. That's you can see the big moves when they're reversing, and usually it's in hindsight. So I caution anybody to look at this like it is a bullish hammer candlestick, regardless of what you think, because A, it doesn't even look clean enough, and two, it is not. I mean, the real hammers are they're pretty obvious. That's the S&P. The Dow still looks also like a hammer, but this is the kind of hammer. I mean, it closed lower than it opened. This is the kind of hammer that could actually fake people out because of that. But it's also, if you had an inside day, which is price is within the high and the low of today's price for tomorrow, um, you could get that kind of a sideways action and then see if it breaks out higher from there. The move now, though, like something to pay attention to is this 2 ATR to the downside, and the fact that it had a hammer or a tail right there. You can see it had a tail there yesterday as well. So, I mean, you can if you don't believe in this trading system mentality stuff, you can see literally two candles right there in a row that respected that lower line, as arbitrary as that lower line can seem to be. Okay, so that's the Dow. It's still all bearish. It's just the bounce that we're going to get out of this is going to be a potential setup for a new rollover. Uh, unless somehow this thing just totally whips higher. And if we go over here, that sure doesn't look like it's in the cards. I think we're in for some sideways to lower action for the next few weeks. Although we do have earnings coming up, which could switch that pretty quick. The Russell, that's probably a hammer candlestick, or it's really close. But again, that's not the hammer I would be like hooking my wagon to. What's the Nasdaq look like? The Nasdaq was the big news today. It was up 1.6%. All it was doing was unwinding some of this bearishness in the last few days, and we did get a new point and figure. I'm sorry, a parabolic SAR flip on that today. So this sets up that sideways action, if you ask me. We're bullish, but we had some chinks in the armor. This thing is popping higher. We need to break this old pivot high. And I think we're going to gnash our teeth and move back and forth. Tomorrow's Friday. So a pullback into Friday and even Monday before we get a chance to even potentially think about breaking out here would make a ton of sense. Bonds still going lower, but we're well below that 2 ATR Keltner channel. So a bounce from here up to the midline might make sense. You could trade that if you were going to do it. I'd be trading it off the 1 hour. When it flips, ride that all the way up until you get up into this zone here. And again, that's counter trend. Only do that if you know what you're doing. The transports have been sideways, and they continue to be. Look at that sideways action. That is 1, 2, 3, almost 4 months. When this thing breaks out, it's either going to break out higher or break down. And I believe it's going to break out higher. Just looking at the pattern, there's no guarantee that's going to happen. That's just what I think. Oil today was down 0.66%, and it is walking a fine line in this zone up here. It's taken out its parabolic SAR dots to the downside, and our COP got stopped out today, which is just totally fine. We've been in that move for most of this run, and yeah, that's exactly what you want. You're getting the meat of this move, and you can't get the top if you play this way. So I don't even know how you would get the top regardless. You'd have to be really watching the markets daily and hourly, and I don't want to do all that. I don't want to do that when I have time. Gold, GLD. It's had this pullback and then it's bounced higher from here. Too bad I'm not in, but I would have been stopped out probably back here anyway. BITO, BITO. Actually is shaping up here for a potential new trade higher. I might, personally, I think it might be a little too soon because we've got to clear some of these old pivots on the hourly chart over here. But and then again, if you buy here and then you clear this one and then you clear this one and then you clear that one, that's a whole lot better than waiting around until it does all those clearing, which would be all the way up here, and then having to buy like on a breakout. You have to take a risk at some point, and the risk right now is only this much. So I am probably going to be willing to take that trade. The question would be, if you're not willing to take that trade, at some point you have to be willing, and what is it that would make you willing? Not, you don't have to. I mean, if you're going to participate, is all I'm saying. So the farther it runs, the more risk you're going to pick up. So if it's going to make it, it's going to be from a place like this. You could wait for those parabolic SAR dots to flip on the hourly, and then play it on a pullback, or just play it off of that, and totally, when it flips, you could use that as your stop. And if it doesn't work out, great. If it does, then it can work out all the way up and beyond these old highs. And finally, the bullish percent indexes. The industrials today tacked on 2 new O's to the downside, went down 5.26%. The NYA minus 0.7%. The transports tacked on 2 new O's today. The 4 is an O because it's red. Went down 8.33%. The S&P 500 tacked on a new O, minus 2.18%. The S&P 100, new O to the downside, minus 1.54%. And the NDX, it's positive 2.08%. This shouldn't be lost on us. This is major bullishness with everything else pretty much spitting in our face. So, and the NASDAQ has been the mover for years and years at this point. So we should be watching Facebook, which is Meta, FANG, Amazon, Netflix, Google, Tesla, and those types of stocks. If we flip over here, by the way, this is interesting. We came out of the Bollinger Bands and pulled back in. We pulled out and back in, but we didn't do that on a closing basis, out or back in, since this candle. This feels like it's coming back in again. And if you look at history, I mean, that just means that we're going to bounce up before we roll over and either take out this negative dot here, or we're going to roll over before that. If we take that out, it flips the polarity. I wanted to show you this too because I've been watching it lately with you guys, but this is the advanced decline lines of these different indexes, and this is when it came down so hard, and then we gapped higher out of the gate, pulled back, and then really it's been strength ever since that pullback across the board. And you can see that they're all pretty well aligned for the day, and that's really how it shook out on the charts. So I hope this helps. It's really all about sticking to your your parameters and understanding your risk and maintaining your risk, managing it. So uh, till tomorrow, we will let you go, and we'll do a weekend review over the weekend. Hopefully, we have a good day today, tomorrow. So until then, take care.